I'm Kumwembe with Business Time. This is a magazine program where we bring you major business and economic news stories making headlines in the country. And coming up in the program today, experts continue to weigh in on recent policy rate cut and its impact. We have a report. We have this and other stories. Stay tuned. Hello and welcome in our main story in the program today. Last week, the Monetary Policy Committee of the Reserve Bank of Malawi announced to have slashed its policy rate to 24% from 26%. This comes 2 years after a rate cut was effected in 2024. The policy rate cut comes at a time at the back of a lowering headline inflation to somewhere around 24.1% in February 2026 from 27.7% in the last quarter of 2025. But some experts have warned that the recent slash in policy rate could fuel consumption-driven credit on the market. The view came during the Monetary Policy Technical Forum held in Blantyre on Friday. Our journalist, Chimwe Mangazi, was there and has filed this report.
During the meeting, Economics Association of Malawi Executive Director Esme Kanyombo urged caution, saying Malawi's inflation target of 5% is far below the projected 24.8% forecast for 2026. Kanyombo noted that inflation in Malawi remained predominantly supply-side rather than demand-induced, meaning aggressive rate tightening had limited effectiveness.
As Economics Association of Malawi, we are pessimistic as such, but this is the target that we are chasing as an economy. This is the target that was put by the authority, the government, also in collaboration with the Reserve Bank, to say if we have to be in a good shape as an economy, looking at the targets that the economy is looking for, then 5% is the rate that we can reach and be comfortable that we are in the right trajectory. This is the right time to reduce the policy rate, and it's something that we have been saying in the past, to say much as inflation has been very high, but mainly because of supply side. So keeping on tightening monetary policy wouldn't help much because inflation has been driven much from the supply side. And we're also happy that it has been reduced, but not that much. It has been reduced with caution because we foresee some risks to inflation, notably the continued pressures on the exchange rate. And more recently, we've also noted the tension in the Middle East, and we've seen fuel prices going up. So it's good that the Reserve Bank has reduced the policy rate, but not that much. So it's like, let's continue to watch how inflation will be behaving going forward.
Financial Market Dealers Association Publicity Secretary Rupert Nkono warned that the expansionary monetary stance risks fueling consumption.
The decision is welcome, and we're expecting it because we saw that inflation in the fourth quarter of 2025 dropped year on year. So when we saw the inflation lowering, inflation rate, when we saw disinflation in the fourth quarter of last year, we knew that the policy rate is going to have to follow suit and stay in line with disinflation. So their decision to drop it by 2% is welcome. And of course, we had some questions because we had seen increases in pump prices, fiscal policy also making some other decisions where we were a little confused. So we came here to have a discussion and see what was their thinking and where they see things going long term, not just now. So I think they have addressed a lot of our questions, a lot of our concerns. As the Financial Market Dealers Association, we are impacted heavily with forex shortages, the rate of the official rate on the market, not the black market rate, but the formal rate. We're also concerned with the level of debt and debt restructuring that's coming, amongst other things. So we had fruitful discussions in there, and we look forward to future engagements.
RBM Director of Financial Markets Department, Esther Machado, considered that foreign exchange shortages remained the economy's most stubborn structural wound and acknowledged their inflationary spillovers across both food and non-food categories.
The pessimism is mostly coming from the fact that we still have foreign exchange shortages, which are likely to continue to persist. And as a result, I think as indicated as well by some of the participants, is that even for the private sector to produce and export, they still need foreign exchange to import raw materials. So we do acknowledge, and as the Reserve Bank and as the Technical Forum Committee, we do acknowledge that indeed foreign exchange issue has to be addressed. And that's why there are all those initiatives that are also contained in the budget statement to address the supply side, because as a country what we need is to address the supply side to make sure that there's enough foreign exchange that will now help all the private sector and everyone else to be able to produce and even also have an impact on inflation, because it was also said that the foreign exchange is one of the things that, from the meeting that is also one of the things that is affecting inflation. So our issue is the supply side. So we do agree that foreign exchange issue has to be addressed.
Malawi's year-on-year inflation rate eased to 24.1% in February, down from 24.9% recorded in January, representing a 0.8 percentage point decline.
Now, the Auditor General's report on the government of Malawi's accounts for the year 2023 has exposed widespread financial irregularities across ministries, departments and agencies, raising alarm over accountability in public finance. In the report, Auditor General Thomas Makiwa said many institutions failed to provide audit staff with essential documentation, a violation of the Public Audit Act. More in this report.
In the report, Auditor General Thomas Makiwa says many institutions failed to provide audit staff with essential documentation, a violation of the Public Audit Act. For example, payment vouchers worth more than 905 million kwacha were not presented for audit, while an additional 374.6 million kwacha in vouchers lacked supporting documents such as receipts and invoices. Timothy Mponera from the National Audit Office explains more.
If you are talking of the findings, in short, there are various key findings that have been there. For example, you talk of payment vouchers that haven't been made available to us for auditing. At times there are vouchers available, but then you find that there are no attachments firmly attached to the payment vouchers that are in place, or maybe those supporting documents are not available elsewhere, because at times they may be kept at a place away from where the vouchers are. So we still accept such kind of way of keeping records, despite of not having them at one place. But what we want is for them to be made available to us. I think for now, I can just cite those two because they're just examples anyway. I think that's one of the misconceptions that are always there. Whenever we talk about payment vouchers not being made available, most times people think that there is loss of money in the process. Yes, there might be some loss, but not always, because for the fact that we haven't had a chance to look at such payment vouchers, we may not come to a conclusion to say money got lost. But it's only when we have access to those vouchers and have a look at whatever happened, we should be able to establish what exactly happened, whether there was some loss or not.
Governance expert Mavuto Bamusi says the report reveals the sad state of abuse and plunder of public funds and confirms the deepening financial fraud and institutionalization of corruption between 2022 and 2023.
the findings and revelations made by the Auditor General in the 2022-2023 financial year report reveal a sad state of affairs for Malawi. They are a reflection of the state of blunder and serious abuse of public resources, almost cutting across all the ministries, departments and agencies, MDAs. And the depth and the gravity of this abuse even gets to the local councils, as it also permeates in the parastatals, the statutory corporations. Now, I say this is a sad state of affairs because at stake are public resources, public funds, a majority of which are contributions made by taxpayers. And we know that it is not easy for ordinary Malawians. It is not easy for businesses to raise these revenues and contribute to the Malawi Revenue Authority as public funds. But later on, it is this same money which is being abused.
Chief Executive Officer of the African Institute for Corporate Citizenship, AICC, Driana Rwanda, says there is need to fully adopt the 2025 Public Procurement Act, which recommends the shifting of all government procurement to the National Electronic Procurement System.
As a country, we have everything that we need. We have the laws, we have the policies, we have regulations. What we need is just someone to start. When we first execute the first one, most likely the second one will run and ensure that they are not caught in the same situation. Because I think where we have, for example, the Public Audit Act, the Public Procurement Act provides provisions that requires that, ministries, departments, and agencies should act in a certain way. But that's not what is happening. So, and again, in those acts, we have penalties that have been provided for. So much so that all we need is to start enforcement. So we have all the necessary tools and the instruments for us to ensure that we have public finance management that is rightly and good for the citizens. But I think what is lacking is the enforcement of those instruments. So once we start, it begins with one person being brought to the books and the rest will follow.
Economics Association of Malawi President Betha Chikaza says the irregularities reflect systemic weaknesses in state-owned enterprises, poor record keeping, weak internal audits, and possible concealment of fraud.
Remember, this is Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country with me, William Kumwembe. We'll be right back. Welcome back. Reserve Bank of Malawi Deputy Governor Kisu Simwaka has held the strides the country has registered in recent past in integrating financial literacy into the education curriculum. Simwaka said this on Monday at the launch of the activities marking the Financial Literacy Week at Zingwangwa Secondary School in Blantyre. He said as digital financial services gain momentum in Malawi, it is imperative that digital literacy goes hand in hand with financial literacy.
Yeah, this Global Money Week is important because it gives an opportunity for us as financial institutions to educate our young ones so that they can learn on issues of financial services, how they can access financial services, how they can learn to save, to invest, and therefore build their future. So it's important that we need to teach them while they're still young, so that as they grow, we should know that we have a nation of people who are financially literate. As a country, our economy has been struggling, and we have the Malawi 2063 is looking at making Malawi to be a wealthy nation, financially inclusive. So because of that, I think as a country we need to ensure that we are on that road, and given that we have also been passing as a country through difficult economic challenges as we are in the process of recovery, we want to make sure that everybody is part of the recovery process, including our youth, so that they are financially literate, they are able to access financial services, and therefore contribute to the economy.
And Bankers Association of Malawi Chief Executive Officer Linus Nkongula said financial institutions were committed to working together to build a financially literate and inclusive society. She said the financial institutions have a collective responsibility not only to provide financial services, but also to educate and empower communities in order to build a financially resilient nation.
This is very important to us because for Malawi to go forward, for our economy to grow, then we need to have a financial literate nation. Everybody should know what is it about money. But not only knowing about money, if you have money, how do you juggle around with the money that you have? So we have seen that for you to make wise decisions, then you need to budget for your money. If you have a little more, why not invest so that it can cover you in future activities? And you can also secure your future through insurance. So this Money Global Week is very important to us as financial institutions, but also as a country. Because for us to realize the Vision 2063, Malawi 2063, then we need to have everybody on board to make viable decisions. In general, the financial institutions, they do have their financial literacy programs within their institutions. But in particular for this week, we have come together to educate or to enlighten the youth about the use of money or the digital finance. So what we are doing, we are going into various institutions like secondary schools. As I said, the Bankers Association of Malawi members are going to technical colleges throughout Malawi just to educate or to share with them about digital finance, about savings, about investment. In general, we are geared to talk about money issues, but how can money move us forward?
Now, in other business news, United General Insurance Chief Operations Officer McDonald Chibwe has urged Malawians to embrace modern insurance policies that would help families remain financially protected while reducing the costs. Speaking in Blantyre, Chibwe said modern insurance policies have the potential to bridge the gap where customers hold life insurance while others are also benefiting from property covers such as vehicle insurance. Chibwe commended the partnership between UGI and Old Mutual for introducing the Molinafe Auto 360 insurance product, saying it addresses several concerns that Malawians were raising.
If you have got a policy that if you are completely paralyzed or you are injured, you have lost part of your body, you can't work anymore, is compensating you as a policy holder. What else can you look for? This policy can pay up to 95% of any claim. A normal policy pays up to 80% in the market. So what else can one wait or hesitate to choose to have this policy? Let me just tell you one more thing. This policy has got potential for certain categories in this package where you can self-authorize a claim. A claim less than 4 million. Don't have even to wait for processes, rigorous processes, completing a claim form and all this. You can just self-authorize, you bring evidence, we pay you off. This is just to make insurance more exciting, so that people should not think insurance were there to rob people or to deceive people or to cause pain to people who entrusted us with their assets and properties. No, we have reshaped and remodeled our business to make sure that we are bring real value to the Malawians. Auto 360 is a full scope policy that is covering aspects of general insurance and life insurance. It's a collaboration of United General Insurance and Old Mutual, where we've come up with a joint offering to the market that caters for life insurance and the general insurance. So Auto 360, in short, it's a model policy that has got embedded benefit from the life section. What prompted us to come up with Auto 360 where a lot of queries, outcry from our customers, both for UGI and Old Mutual, in terms of the gaps that were there from our previous offerings. Number one, for example, we could have customers that in the back of their mind, they expected that when one is involved in an accident, maybe is injured or is completely deceased, or for example, you are stuck somewhere, you can't move anymore with the vehicle, the insurance company obviously automatically will compensate for that, but which is not the case. So we used to have a lot of complaints, a lot of submission to the regulator in terms of insurance companies not assisting me. So we thought it as an opportunity to come up with solutions that should address such kind of gaps. But some of those gaps could not be just handled by us as UGI because they were to do with life insurance. So we need to get a partner that should also come square to address on the same. Likewise, from the other side, Old Mutual, they also have to have customers that they expected to have a life policy, but with also benefits for property cover like vehicle insurance, hence that collaboration. So there are quite a number of gaps that Auto 360 is addressing. So number one is addressing issues of death of the policyholder. If one dies whilst involved in an accident, we will compensate the family members for the life of the one that has been deceased. The policy also comes with a free rider of funeral insurance called Mtun's funeral cover. So this one, it doesn't attach even to accident of the vehicle. When you are buying the policy, we just want you to nominate 4 members that should benefit aside you if they die for whatever cause can cause their death, probably except suicide, because suicide doesn't get covered. But any other cause, we are saying that the funeral expenses will be covered, from handling the body in the mortuary, the HESI, and all other associated costs with funeral. They'll be covered under the Mtu's package. So it's a benefit that is out of this world. It's a benefit that is straightly hitting families, and it's a serious saving in terms of cost. And it enables even other individuals that have got family members that are not covered from their workplace to be considered. It is even a benefit that makes family groups to nominate family members that can benefit from it, as long as they've got vehicles that are qualifying for Auto 360. So what will happen, just alignment. Number one, Auto 360 is a policy that covers vehicles that are worth 20 million and above. And you can agree with me that a normal basic vehicle now, even if you talk of entry-level kind of vehicle, they are already over 20 million or so. So almost everyone is qualifying. So as long as the vehicle is qualifying, that's condition number one. Number two, it's in terms of the price of the product. It's a normal price that we charge as UGI, about 6.5% rate. So for example, if you were looking for upgrading, we would look for these 2 factors. Is the vehicle qualifying? Is the rate qualifying? And then we would make adjustments for this kind of arrangement. But obviously we do upgrade instantly the moment you have expressed that. And we invite even customers that are already with us to come and have far much better benefit that we've come up with.
Well, with that story, we've also come to the end of today's edition of the program, Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, thank you for watching. My name is William Kumwembe, but always remember, if it doesn't make money, then it doesn't make sense. Stay safe and goodbye for now.